Nicholas Poynton has joined me in the studio to talk business. Nicholas, so there's a new company that wants to get its name on the main board at the NZX. Who could this be?
Yeah, look, the head of the NZX did tell us the last time a company listed that there would be a flurry of activity in the run-up to Christmas, and today it was announced that another aged care and retirement village operator is going to list this week. That's Radius Care, which is sort of fitting given that one of the companies that delisted this year was the retirement village operator MetLife Care. So Radius, they were set up in 2003 as 22 facilities in 2 villages around the country, and it cares for about 1,700 residents. The company won't be raising money as part of this listing, which is perhaps unusual, but the company founder and chairman, Brian Cree, says this is a step towards future growth that will allow them to tap the shoulders of local investors when it needs to raise that money to scale up and fund future growth. So it's the 3rd new listing of the year. There's going to be a 4th next week. That's the New Zealand Rural Land Company.
And that qualifies as a flurry.
Well,
you know, in terms of because they're as rare as hen's teeth, aren't they?
I know. We're going to have 4 listings this year. I think we had 1 last year. I'd have to go back through our archive to see how often this happens. But look, when I spoke to Mark Peterson the last time we chatted about this, like why is there so much interest? One of the things he puts it down to is the success of our NZX in light of COVID-19, and also a lot of companies they're struggling to get money into their business. They probably don't want to take on any more bank debt. That private equity. We've had plenty of stories talking about the difficulties of getting foreign capital into your business. So the next option, the option that makes sense is going to the local share market. So we will just have to see what happens here. Look, there might even be more to come. We just don't know. Just wait and see at the moment. But we'll have more updates from that listing later this week. I plan to go to that.
It's funny because that interestingly leads us on to the next story that you're going to talk about today, in some ways, investment. So if you're under 30 and can't buy a house, who is suggesting that you take your money and go buy a business instead?
Oh yeah, I'm sure it's the type of thing that will annoy and frustrate an already disillusioned group of people under the age of 30 about rising house prices. But the small business brokering firm known as ABC Business says younger people locked out of the market, they should consider saving for a business instead. So they released this data today, and it shows that for the year to date, the average price of an SME, a small to medium-sized enterprise, is $650,000, about that. Compare that with the average price of a house, which is $725,000, and yet the returns for an SME is $215,000 a year on average. That's 6 times more than the annual returns or capital gains you generate from owning a property.
On average, but did they tell you what the failure rates were for business? Because they're pretty high, aren't they? New companies starting up.
Well, yeah, they are. And look, when I was speaking to the managing director, Chris Small, he was making this sound all incredibly straightforward and easy. So I put this to him. I used myself as an example. I said, look, I'm under the age of 30. I am, by all accounts, locked out of the housing market. And if I had the money, I probably wouldn't go out and buy a business because, look, there's a risk in running a business. You've got to manage staff, there's liabilities, there's all these things with compliance, things that I know nothing about. Even though I am a humble business reporter, I don't know how to run a business. And to that, ABC says, sure, there is more risk, but they don't think that there's 6 times more risk. So look, I don't know how you calculate that, but they seemed pretty confident when they said that to me. And he says there's plenty of people out there who can help you run a business. And in his opinion, this is the managing director, Chris Small, he says, look, it's better to start now at 25. So by the time you're 35, you'll be a wizard at running a business. So look, I'd be interested to know what people think about this, people under the age of 30.
Okay, 2101 on the text. Let's ask them.
Yeah, and look, and just finally, I did have to ask him, how does this all work? Because most people, when they decide to buy a business or start a business, they'll borrow against assets they already have. Most people under the age of 30, they don't have a house to borrow against. And he said he used to work in a bank, and the way business loans tend to work, there is a much higher deposit required, reflecting the risk involved, usually about 50%. If you're going to take one of these loans, you need to have a sound business plan. And there's also something called a General Security Agreement, a GSA, which is like a mortgage. And he made sense of all of this using this example. He says the average house price in Auckland is $1 million. So that means if you want to borrow 80% from the bank, you're going to need $200,000. The average business is $650,000. Half that, is about approximately $300,000. So he reckons you're already on your way there. You're not too far off.
Oh, I do want to hear what people think of this and this suggestion. If you're locked out of the housing market, you should instead go out and buy a business if you're under the age of 30.
Yeah, well, I'm interested to hear what people have to say, or whether or not people have actually gone out and bought a business. Who knows?
Instead of buying a house. Hey, what were the markets doing?
Yeah, so the NZX, it's up 25 points to 12,631. Our dollar is at 70.4 US cents. It continues to hover around there. 94.7 Australian and 52.4 British pence.
Thanks, Nicholas. Nicholas Poynton with Business News.